Hello everyone. Adil here again. So, inspired by my feedback from my previous video, I have decided to share another one. So hopefully, you guys will find this one just as beneficial as the previous one, and I hope to get feedback on this one as well. So let's get started. All right. So in this video, I intend on um, hopefully getting some feedback. Okay, 1 second, I'm just gonna pause. All right, I'm back. So in this video, what I hope to share with you guys is start from the basics of what a candlestick is, and then go into some of the deeper topics as to where and how I pick a stock and where to buy, where to put a stop loss, and why I do that. All right, so let's just let's get started. So candlesticks, a green candlestick versus a red candlestick. A green candlestick is basically where it closes higher than where it opened. So here in this case, the candle would have opened here and closed here with a high of this point and a low of this point. Meaning here, this, for example, could have been $10, close of 11, maybe high of 11.50, and a low of 9.50. So open at 10, 9.50, 11, 11.50. Same thing for the red candle. Red candle means it opened at 10, closed at 9, low of 8.50, high of 10.50. So this could have happened in any order, but the open and close happen in this order, right? So open here and close here for sure, but it could have opened here, went high, and then come back down and touch the low and close here, or it could have opened here, went all the way low, and then went all the way high and then close here. So same thing for the green candle. It could have opened here, it must open here and close here, but it could have went all the way high first, or it could have went all the way low first and then close here. Okay, so that just really fast on that. Now the next. So candlesticks follow, patterns, right? So, and that usually that's what I am, a pattern day trader. I look for patterns. I look for levels of resistance and support. So when you look at the chart, usually they form some level of resistance and some level of support. So if they break in either direction, then that's when we look to enter. So, once it hits resistance here, these levels, whatever this level is, we look to enter right above there with the stop loss below these candles, right? And same thing for the support. If they break support, then we have room to go lower. What are the different types of orders? This is the question that I get asked the most. And I will attempt to spend some time here and explain. A market order is an order that will execute at the next available price, meaning as soon as you put a market order, whatever the next price that is available gets executed. And if you want to get in a position right away and you don't care what price you execute at, then this is your order. But this is not advisable, because if the market is trading at 9.50 and you put a market order, you could get executed at 10.50, 11, 12, 13, 14, 15. You could get executed anywhere, right? So this is not advisable. Usually it's executed somewhere close, but there's no guarantees. So this, stay away from this order. To get in, to enter. A limit order is an order that is executed the price provider or better. Meaning, let's say a stock is trading at $12 and you put a limit order to enter at 12.50, right? The stock will execute at 12.50 or better, meaning it could execute right away because it already has a better price. Okay, so that's it. A limit order will execute at the price provided or better. So if the stock is trading at 12 and you put 11.50, then it will wait for 11.50 to hit before executing. But if you just put 12, if you just put if you want to buy the stock at 12.50 and the stock is trading at 12, it will execute right away. A stop market order, or also known as a stop order, this order executes as the next available price. It becomes a market order once the stop price is triggered, meaning, and we use this to get out for a stop loss. So when we put in a stop loss order, we put stop market, meaning, let's say I enter at 12 and my stop loss is 11.50, I would put a stop market at 11.50, meaning as soon as the stock hits 11.50, I want to be out of that position, right? A stop limit is an order that activates a limit order once the stop price is reached. I use this order to get into a stock. Let's say a stock is trading at $12, but I really wanted to wait till it gets to 12.50. So what I do is I use a stop limit order, and I'll put a stop of 12.50 with a limit of maybe 12.50 or 12.51, right? So as soon as 12.50 hits, it will activate a limit order of 12.51 or 12.52 or 12.50, whatever price you put in. So in a stop limit order, you have to put two parameters, one being stop price, one being limit price. In the stop market order, you only provide one parameter, which is the stop price. A limit order, we use that limit order to take profits. So there are three types of orders that we used, which is also known as a bracket order. So when I'm entering with the stop limit order. So I'm putting two parameters, one being a stop price, second being a limit price, and then I'm putting a limit order for my target and a stop market order for my stop loss. We'll talk more about this, but this in the next example, in the next slide. Okay. All right, this is an example for breakout, and we traded this today. We see the candlesticks forming resistance here at this level. Whatever that level is, doesn't matter. Let's say that level is $12. We see it forming resistance. So, all right, so what we want to do is we want to put a stop limit order to enter this position here at this level. If this is 12, we want to enter at like 12.02, 12.03. Or let's say this is 12.50, sticking to our previous example that we used. If this is 12.50, we want to enter 12.52, 12.55, right? But let's say that I call 12.50 by, and the stop loss here, let's say 12.50 by 11.50, but the stock is at 12. And if you put a limit order, it will execute right away. The order you want to put is a stop limit because we want to wait till the stock hits 12.50 and then put a limit order. Okay, we don't want to buy here, we want to buy here if it breaks out, right? If it breaks out, we want to buy. Let's say one here and then it never, this never happened, right? And it could have continued its way down. We don't want that. So that's the difference between a limit and a stop limit. If the stock is trading here at 12, if you put a market order, it will execute right away. If you put a limit order of 12.50, it will execute right away because there's a better price available. What you need to put is a stop limit order if you want to get in at 12.52, 12.53, somewhere here, with a stop loss around here. Stop loss is a stop market order, right? So you want to put a stop limit to get in, stop market for stop loss, and a limit order to get out. So here we would put 1252, 1150, and then maybe our target is 13, whatever. So we would put a limit order to take profits at 13, somewhere here. Hope that makes sense. Fake out. So we saw a breakout, right? Here, in this case, the trade worked. But in this case, the trade didn't work, right? That's why we have our stop losses. So again, same thing, right? Same pattern forming is trying to break this resistance. And here we would have gone here at this price. And we were hoping for something like this to happen, for it to break out. But it didn't break. So it triggered you in, and then boom, came down, stop loss. So again, what we did here, we got in with a stop limit order. Let's say again that this is 1250, right? So, and let's say when I called it, it was trading somewhere here at 12. You don't use a limit order, you don't use a market order, you use a stop limit order. So you get in here, 1250 stop price, limit price 1252, and then stop market right here. So this stop loss is a stop market, this buy is a stop limit, and then if you want to take profits somewhere up here, which it never happened, you would put a limit order, and then this is a stop market, will stop out. Hope that makes sense. So the various patterns that are used in the market are, a flag pattern, pennant, cup with handle, ascending triangle, symmetric triangle. There are all sorts of different patterns that are used. And most technical traders use all of them or some combination thereof, right? They use these patterns. Even algo traders, manual technical traders like me, or and bots that are trading, they use some some of these patterns, or they might be using some others, but these are the most popular ones, right? um, a lot of people have like a lot of indicators on their charts, and this is just confusing for me. I just have I just have price and volume, and then I have my levels drawn. So this is the trade that we looked at, which was a breakout. And if you look at TDC, was it TDDC? Um, TDC, I'm sorry. So it was TDBC. So this was the breakout that we looked at, right? So I have my levels drawn already. So these levels are drawn. These are moving averages and whatnot. Pretty clean chart, not with too many indicators. And we would buy this at 23.26 with a stop limit, 23.18 right here with a stop loss, and then we hope to get this breakout. But if we don't get the breakout, we have the stop loss right here ready to be executed if it doesn't work in our favor. I'm going to look for one more example, guys, here. All right. We traded MBIO today at 463. So we traded here somewhere around here. But similar patterns, right? So we could have traded this stock right here at 434. We saw one hit, two hit, forming resistance, and then breakout with a stop loss right here. Same thing here. We could have traded at 447, resistance, resistance, breakout. So the more times it hits that wall, the higher the probability of it breaking out, right? So if it hits 1, 2, 3, so this just happens 1, 2. Here also 1, just once, right? So the tighter formation that it forms, higher the probability of it breaking out. Like here, we traded SRPT today. We saw 1, 2, 3, 4, 5, and then here it broke. We were waiting for this to come to 160. 160 by 159 was our trade, right? On this SRPT. We did not get in with a market order or a limit order. We got in with a stop limit order with a stop at 160 and a limit of 160, 160.10, 160, whatever, right? Stop limit, stop market, and then 161 was our limit order that we took profits on, right? I hope I was able to answer some of your questions with this. What's a breakout? What's a fake out? More importantly, the different types of orders, because I've been getting a lot of feedback from members that they're executing the wrong type of orders, right? Um, so this was just to lay the foundation, and hopefully we could build on this. But let me know in the comments if you guys have any questions, and I hope to answer them just as soon as I can. All right. Hope this video was helpful. Let me know. Thank you. Bye.